I'll put this over here. Good morning, everyone. How you guys doing? Welcome, welcome. Hope you guys already have a win for the day. I hope you already have a win for the day. All right, so we had ADP come out earlier. Pretty good news actually across the board. I'm expecting markets to react positive to this news. I don't know. We'll see. I am using my virtual cam here it's for everyone in Butter in the live group today because I'm streaming. So kind of killing two birds with one stone. Sorry if it's a little lack in quality, but yeah, I got it. That's the only way I can stream properly, or else it gives me weird glitches and whatnot on the tube. So yeah, I'm expecting the markets to act positively overall, but we'll see what happens. The tensions with Israel and Iran, what happened yesterday was just wild. So we'll see if that ends up calming down today. I mean, there were, from my understanding, no Israeli casualties, and that's the last I heard anyways. If I'm wrong, sorry, but that's the last that I heard. So that should be relatively good overall because I don't know, I mean, Israel, are they going to react? Yeah, they're probably going to react, right? So that's not good. So there's still this uncertainty, but the ADP report came out and that looks good. And hey, nobody died in the attacks. Messed up the atmosphere a little bit, of course, but nobody died. But it's just the tensions, and I think that people overall, it could just lead to kind of what we're seeing right now, right? Which is the market acting kind of a little differently than expected. I mean, I would have expected, just overall, I would have expected us to see just more of a pump, especially with the NASDAQ. But you're just seeing kind of like a grab of the highs here from the overnight session. So we're gonna get into like the technical breakdown and all that in just a second. But it is a little strange. Like I would have thought that that we pump off of that news, and we just haven't done it. And I don't know whether traders were asleep or what, but I mean everyone's awake now, so there's really no excuse. I'm gonna meet Kevin down. I got him in the background. Let me turn him down. There we go. Let's see what else. Oh, Troy, what's up? Good morning, brother. How you doing, man? Pretty good. Nice, nice. Cool. That's what's up. Cool, man. So I think I'm just gonna go ahead and dive in real quick, and then we can take a breather here in a second. But just to kind of get our morning going, want to take a look at. We'll start with the nasty Nas. All right. So yesterday, I haven't touched the chart since yesterday. So everything that you see up here is highlighted from yesterday. If we take a look at sessions, this is yesterday's range from the top here in Asia session all the way down to this highlighted purple. And, we had some liquidity marked below, and I'm going to get rid of this 4-hour gap. I'm going to get rid of this support zone based off of a daily. And you can see that the 4-hour, interesting, I put no top wick, that's no bottom wick. So you can see this arrow right here, right? And that arrow was based off, let me go to the 4-hour range time frame, and you can see there's no bottom wick on that 4 hours. So as we were dumping, I kind of pointed that out. I was like, that's pretty suspect. Actually, I didn't see that. But more importantly, we have previous daily lows that were tapped here, and you can see that market took that out. And then obviously this news with Iran just was pretty insane. So we had a really nice dump down underneath the lows, grabbing all of this liquidity here. Really no sign of the market turning up. And that's the thing, is like a lot of traders will just go in long at these liquidity levels without any sign of reversal from the right, like in present time. They'll just simply mark it and then take their long. And I was talking to Dakota last night about this, one of our members, Dakota, and good morning, Dakota. And I was basically like, hey, look, if you didn't have any time and you were just trading the 4 hour and the daily, I mean, previous daily high and low, previous weekly high and low, previous month high and low, previous session high and low is kind of pushing it when you're talking about a 4 hour time frame, because sessions don't build as much liquidity as, obviously the daily, the weekly. Obviously weekly is very important. And that's exactly what we did. So if we go to the weekly chart, the weekly time frame, we went right to this highlighted gap that I had highlighted during our session. And the reason that's highlighted is really interesting, because if I go to the daily, right, I think it was actually the 4 hour, my bad. If I go to the 4 hour, we have a shelf, right? And I was saying, yeah, price kind of came down, tested the shelf. Not, a shelf is a little bit more discretionary. It is a little harder to define a shelf because it is a visual thing. It's these candles make up, this is what the market is doing, and it's up to your discretionary, determination what a shelf is. A shelf is essentially the breakout zone of a previous swing, and the leg that swing creates, like in this case, we swung up, right? So this leg is up. The shelf is the area that price usually will come to retest, just as a lot of times there is a fair value gap in here too, because orders get left behind. You can see that's exactly what happened. If I blow this up real big for us to see, you can see that if I highlighted the fair value gap here on this leg up, you get the retest almost to the tick, right, within that fair value gap. And, this coincides with sort of the one strategy for life model, but the only difference is we're taking it at a breaker and in a fair value gap within the breaker. But in this case, this comes back, tests the shelf. So I was saying, like, we didn't really go deep here. We could go a little deeper. And this is exactly what price did. It actually came down and tested that 4 hour shelf, kind of like more as expected. And the thing is, guys, is like, I'm not saying that from like, this is what price has to do or anything. This is just what happened. And I'm trying to look for good targets. And that, to me, because price was not letting up, was a pretty solid target. Now, when price gets there, what can we do, right? And I'm just replaying a little tail of the tape from yesterday, and then we'll get into today. But it's kind of important for you to understand this, because I think a lot of people get this, I'm not going to say wrong, because there's no wrong or right? It's just my opinion. This is how I trade. And this is what I've learned after 7 years of doing it. And I'm not saying it's wrong. I'm just saying that what I like to see is something that shows me that price is done going in that specific direction. And am I wrong a lot of times? Absolutely, I'm wrong a lot of times. But am I right more than I'm wrong? Well, that's the goal, right? And even more than being right, I don't need to be right more than I'm wrong. I need to be able to manage the trade. So in this case, we get an inverted fair value gap right here. Here's your inversion, right? Let me just, before I put that actual trade on the board, I'll show you what I'm talking about. I'm gonna blow this up. And so you get an IFVG. An IFVG is basically this candle body closing above this 1 minute. I know it's a small time frame, but look, we have, if you look at structure and everything else, we don't really have much to go off of. So the faster price moves, the lower the time frame I'm usually needing to go down on, because in this case you get this inversion. And then what does that give me? That gives me, at least if anything else, I have two options. Number one, I could simply go long at the inversion, right? Put my stop under the swing, that's fine. Protect it at least with this fair value gap. We have a fair value gap, so price theoretically shouldn't really close a body beyond that fair value gap. So put under the swing, that's fine. Where's my target? Well, my target is really weird, because I'm targeting liquidity for this trade. And if you go to your first target, you're like, okay, this is sort of, it already kind of, like, if I'm taking the trade here, this is sort of my first target, I guess. It's kind of weird because there's no clear swing point. But let's just say you're like, all right, fine, 1 to 1. That's, I mean, if I don't have anything else, I'm going to just see if I can go to 1-to-1. And then I noticed this. And what this is, and I'll kind of zoom over here, you can see this is the data highs. So when that news dropped, you had 10 o'clock news yesterday, right? For the jobs report. And you can see that we created a data high on a 1-minute time frame that never got tapped. And so you know what? Usually those data highs get tapped. I mean, we mark them all the time, right? Data highs, data lows. And look at where price tapped, like to the tick, right? It's pretty cool. But you could have gone in here, or you could have waited for the pullback. You could have entered in the middle of the middle of this inverted fair value gap, wherever you want. But this is an early indicator. This is an early mover type of trade, right? This isn't necessarily the one strategy for life model, but I did it yesterday because it was the one thing that I saw. Price had way overextended. We hit this really kind of critical support level, in my opinion, and we had some displacement here that was really nice. We had displacement down, and then we had displacement going up a little too. So I felt pretty good about it overall. So I ended up taking that little scalp. And it's just interesting because, when we talk about structure, these levels, I'll zoom back out to the 4 hours so we can be looking at it while we're talking about it. These structural levels of support and resistance that often get overlooked are sometimes some of the best levels that you can trade off of if you know about them. Like, I think a lot of people just don't really know, so they don't end up trading them or seeing them properly. So what do we have now? Like, let's look at the 4 hour, time frame and look above us. What do we have? Well, you have the same thing in reverse, right? We never came up and tapped this shelf. Here it is, right here, right? Does it have to tap it right away? Look at how much time went by before we came down. And I could find shelves that have not been tapped, right? So how do you know, when to trade, when not to trade? Well, in this case, yesterday we're dumping. I'm not going to sell at a discount, right? So that's one of the things that I'm not going to sell way down here just because I think it's going to tap the shelf. And I think a lot of people do that. A lot of people would put a trade on here because, they see this momentum and they're like, okay, I'm just going to follow the trend. But you've already at a discount. So if you look at your swing points, in this case, you have to kind of go up to a higher time frame, like a daily or something, because we don't really have a 3-candle pullback rule. We didn't know that this was going to be the third candle pulling down or anything. But if you do, your PD, your premium discount fib tool, you can see we're in on a higher time frame. We're in a premium. So yeah, okay. In that sense, it makes sense to sell. However, what's the trend? And this is where, like, go back. You show me your setup and show me where you went wrong, and I'll show you a different time frame where you're right. So it's like a lot of times they're like, switch your time frame. So what am I saying? I'm saying I want to be buying longs. This is an uptrend, right? I don't want to be selling, first of all. Second of all, the 4 hour, the daily, it's all in an uptrend. Let's take a look at where we're at now, because they're a little different, but let's go ahead and check it out. Okay, so this 4 hour is pretty, actually, in my opinion, kind of messy. So you have as far as your trend, you have your highs, right? And what created the high? That's always the question you want to ask. What created the high? You have this low, 3-candle pullback rule here, right? So this would be our low. And so we're going to mark that range. Here's your high. Here's the low. And I go from the candle body. And so if we go from the candle body, then we can see that structure was broken here. And then we continue down. So we really have not swung up. We don't have 3 candles going up to consider anything a swing at the bottom yet, right? So technically right now, 4 hour is in a downtrend, right? And your daily is in an uptrend. The weekly is in an uptrend. So we should be looking for a potential sign of reversal since the higher time frames are showing us up. But if we're going to scalp, right? If we're going to go to a day trade or an intraday trade, even could be an intraday trade even, then I like it when it all aligns, when it's bullish on the weekly, the daily, the 4 hour, the 1 hour, the 15 minute, and then I'm scalping on that 5 or that 1 minute time frame. And that's when it gets like really sweet. But in this case, the trend has shifted a little bit on these lower time frames. So we're looking at down, right? Let's go to the 1 hour. Let's check it out. We can see our session ranges. Here was the overnight session for Asia. Here's London. And now we're starting off with this New York. And we got about 13 minutes until the market opens. So what happened in the overnight session? Can we form a daily bias today based on what we see? And so if we look at just what happened, we have really tight consolidation across the board. I mean, like this is actually, I'm surprised that it moved this much, but Asia sort of consolidating here. You have London with very mild grab of the lows. So looks like London grab lows. And then you have pre-market grabbing highs. So what do I see? Well, I see a search and destroy model potentially forming. Okay, seek and destroy, search and destroy, whatever. This is where you have your ranges. Here, I'm just going to highlight them. Expanding like this. Potentially, I'm just going to, I'm not saying it's going to look like this, but something like this. It's boom, 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 boom. It just grabs highs, grabs lows, grabs the highs, grabs lows. And so this kind of makes sense. And at the end of it all, you could end up right in where you started because yesterday was a nasty dump. There was a lot of tension yesterday. So today could potentially be a seek and destroy day. And we had numbers come out for news. They were positive, and the market just is not doing anything. In fact, I'm surprised that we're not up for the day right now. Like on the Qs, I'm just surprised that the market is actually where it's at. So let me get rid of some of this noise so we can have a clean chart here. But what do we have below us? We have support below us. And we also have resistance above us. And the resistance is really a weak high. And the reason why I say weak resistance, weak high is because the higher time frame, your daily, your weekly, these are all bullish. And the market is still in a bull trend. So make no doubt about that. So the other thing that I want to kind of point out is this pattern, right? We do grab liquidity. We grab from the bottom, we grab from the top. And so if we're going to see some type of move up, we might manipulate down to grab more. And we have pretty nice targets beneath us. So let's go ahead and mark our targets. I'm going to go back up to the 4 hour. And this is as simple as it gets, right? So we're going to mark this yesterday's low. So this is previous daily low. So we'll mark that out, put the target on there. I like to use these little targets because when they get hit, I remember, oh yeah, that's kind of like a prime area. If I look left, we do have this gap that was never filled. It's kind of suspect, right? So I am going to mark that 4 hour gap, just the part that wasn't filled. I'm interested in that. It's interesting to me. And these liquidity targets, a lot of people, they overthink this stuff, man. Trading is subjective to your opinion. There is experience, intuition that is at play when you're trading. It's not mechanical. So just my belief. And guys, by the way, shout out to, I'm going to share this screen over here. Shout out to everyone who is posting awesome content in our community. Like there are so many just amazing posts. Let me refresh to make sure this is accurate. Yeah. Ishmael, focus is key. This is an awesome post. David, how much should I risk? This is an awesome post as well. The $200 to 1M challenge. I haven't really done anything here. I will update you guys on that as we go. That's going to be fun. TMT game, so many wins yesterday. There were a ton of wins. Thanks guys for playing this game. It's going to be fun, man. And this game, we've been playing this for anyone who just doesn't know. You can post your wins inside of, I'm just going through and I'm liking stuff because I like to like everything. You can post your wins daily. We had like over 100 and something a couple weeks ago that were all posted in here. And, just for posting, you win money. I mean, we got a $50 cash prize. Who won last week? Kevin, KW, man. Congrats, KW. Got a lot of people posting just awesome content. So I just want to give a shout out to everyone who's just posting amazing content. And yeah, man, of course, everyone gets something from that. You know what I mean? So continue to do that. That's just how we thrive as a community. And really appreciate you guys for doing that. Dakota, good morning. Step, good morning. Lewis, good morning. What do we got? We got 25 people in the private chat, in the private room. What's going on, guys? Alan, what's up? Stuart, what's up? Stuart, if you guys haven't seen his video, man, go watch his video. I did this video, I posted on the YouTube channel. Stu's right here, right? If it's as real as it gets, baby. He's there, flesh and blood. It wasn't made up. Yeah, man. Let's see what else. Go back to the charts. We'll finish marking this up. If you guys, actually, yeah, before I go there, let me finish marking these liquidity targets real quick, and then we're going to move forward. So I do want to move this shelf to the fair value gap. And the reason why is because I think it's interesting. I'm just kind of noticing this right now, the middle of this fair value gap, which is a lot of times these middle of these 4-hour fair value gaps are, you guys see it. It happens all the time. Just, it's a place you could set an alert here if you have work to go to or whatever. I'm going to set alerts up just so I don't miss anything. And the idea is that once it taps these, then you zoom in on a lower time frame, see signs of reversal, and that's the entry model, right? So you're not just getting in to get in necessarily, okay? So Sunday highs, this was yesterday, Sunday night highs were taken. I talked to you guys about this yesterday morning. This was like a primo target for us, so that was cool. That all got tapped. Boom, boom, boom. Let me delete all this stuff up here. We still have our 4-hour fair value gap above us, so there is liquidity above us. Previous daily high is above us as well, so we'll keep that on the board. I'm going to put a target up there just in case we rocket ship up. Okay, it just gives me places to look so that if price does hit these, I'm looking at it. You know what I mean? What else? Go to the 15-minute, go down on, actually, let me go to the 1 hour, and then I'll go, yeah, 1 hour is just crazy range. So we're just stuck in a range. Nothing's really happened. I'm going to go to the 15-minute and just see if there's anything I can pick up. So we got 5 minutes until the open, and I'm not really seeing much of anything on the 15. We're inside of a range. What's the range? Well, look left. So what's the high? What's the low, right? So essentially, this 15-minute is the same as a 1 hour, blah, blah, blah. But you have this low. This was the low, right? And what created the low? That's always a question you want to ask. What created it? And it's way up here. So we're just inside of this massive, crazy news range, okay? So until price really breaks out of this range, it's going to be a little funky. Okay, looking at SMT, possible SMT. Let's go ahead. I'm going to delete some of these alerts. Oh, never mind. That was the alert I just set. Come on, Mike. Let me put that back up. All right, so SMT. I'm going to hand the mic over to Troy, man. Troy's the SMT master. So you see anything, Troy?
I do see some bullish SMT, but when I zoom out to a higher time frame, I'm not extremely bullish. I think we're now, like what you said at the beginning, we're just kind of consolidating, and it might be one of those seek and destroy days. And come Thursday or Friday, we're going to see the big move. So it's just kind of anticipating where we think price might go. Because if you zoom out like on a weekly on the NAS, we went up into like a weekly gap above us, and then we tap that. So you can see that purple box there. We tap that. Then what are we doing this week? We're coming down into our other gap, which is that black bar. So do you see that we basically have tapped both gaps, both fair value gaps we have tapped. So really all we have is like the lows or the all-time highs, and as far as like where we might be going. So basically, I'm looking for more gaps. Like where's our next gap we're going to tap? Well, there isn't any. So now it's kind of like in no man's land. So I just have to be really careful and cautious right now, before I say we're going up or down. I have to dive down into like a daily. You know what I mean? I have to be very, very careful on where I think price might go. Do I think we're going down further ultimately? Yeah, but I need more data. I need more information over the next day or two to really be decided on what I want to do as far as like swing trading.
Yeah, solid. Yeah. So the middle of this weekly fair value gap was tapped as well. We talk about these being important to have on the chart. And yeah, the middle of that was tapped, which coincided. I forgot to mention this. I got distracted, but that falls in line with what I had up here as a shelf. So on that shelf was a 4 hour. So the 4 hour shelf right here coincides with the middle of a weekly gap. It's kind of ironic. But it's maybe you could chalk it up to prices fractal, whatever. The market's about to open, so I'm going to turn the soundboard on. Let's make sure that's on. There we go. Nice. There we go. Oh, don't be disappointed. It's okay. Yo, you guys will be all right. So turn the soundboard on. Okay, I got it. Yeah. And let me see here. So that's a 4 hour. We'll leave that up. We'll look at the 15. Yeah, I want to keep the 15 up here just because. Just because. How about that? Let's go over to what I had written out. I got a bunch of stuff on the board today. All right, so we can take a look at some fun stuff. This is my fun board. So, yesterday we talked about NVIDIA breaking this. Thank you. Yeah, breaking this trend line and then coming back and retesting. And kind of the idea here is that, if you're going to follow structure, then you got a lower low, which maybe that's why, because NVIDIA does lead the way. Maybe that's why the Qs are having trouble this morning. NASDAQ is sort of flailing. I know Tesla came out with their numbers. I think it was on par. So the delivery numbers were on par. But you have this leading indicator over here. Again, we're going to have to wait another 30 minutes to see what's going on. But this right here, this whole setup on the Euro USD, let me just show you. This setup shows that, you grab highs, so manipulated the highs, and this could be a push lower for Euro USD. And market is open. Cool, right on. So we'll go back over to the market. Check out, yeah, we'll just kind of keep our eye on it. I'm going to set an alert up here, set an alert down here. Let's go over to some more fun stuff. So I'm expecting a push lower. Now that we've broken, we retested. This should create lower lows for Euro. Probably going to see lower lows. I took this trade with Dakota last night. Dakota, we were on for like 2 hours talking, man. I mean, maybe it wasn't that long, but we were on for a while, and we talked about Euro AUD. And I took this long last night, and it came back and grabbed my stop this morning, the break-even stop. But man, had I been awake, I should have just set this up at the highs. But let me go to the 4 hour actually. So what we noticed, the reason why I have these arrows here is because there was no bottom wick on the 4 hour. And that is exactly what price came down to create. So it created the 4 hour wick. Move this over so you can see it. And then it went back up and created, let me get this Asia session range. All right, there we go. See how there's no top wick here? So we were down here, and I'm like, Dakota, we're probably going to form a bottom wick. And then price is going to go back and form this top wick. And that is exactly like to the T what happened. But I had my take profit too high. I should have just done something like that, man, because my stop loss was okay. More of a overnight, day trade. Exactly. Yeah, exactly, Dakota. Yeah, to the T, right? Now, whether or not it breaks this trend line, we are forming really nice trend line liquidity here. So I would want to see some breakout. Let me go to the 1 hour. I would want to see this breakout, nice and strong bullish breakout, and then potentially look for a pullback into a shelf or something on a lower time frame to go long on Euro USD. That's what I think I would want to be looking for there. especially since I'm kind of more bullish that the market is most likely going to, like for today, right? Most likely going to recover and come up here. I think the market has more of a chance to go higher today than lower. And that's only because Israel conflict has, I'm not saying it's over, but it's de-escalated for now, no casualties. And then you have the news that came out was bullish today. So, could there be other things that happen to bring us lower? Yes, absolutely. But overall, my sentiment is up. We're in a bull market. All the high time frames are up. As much as I look at this market and I go, why the hell are people buying at all-time highs? Doesn't make, like, as a trader, I think about that a lot and I'm like, man, it doesn't make sense. But as a fundamentalist, you're thinking about these companies, the growth trajectory. Are they really overvaluated right now, or is Nvidia really going to grow by 75%, right, over the next decade, or whatever it was, 5 years or something like that? They're going to double, and Nvidia is leading the way. I mean, it counts for 40% of the NASDAQ movement in this bull cycle. Nvidia and Apple were like, those two alone were like more than 50% of the entire movement of the market. So specifically the NASDAQ, right? So it's interesting how these Mag 7 companies just are like the only companies that matter. All the other, 90 companies, there's like 10 companies that matter. The other 90 don't matter. Like, who cares? Just really interesting to me how that works. But yeah, my sentiment is up on the market. That doesn't mean you just take a long. I mean, that's, you can. You could just go long and say, okay, I'm just going to go long. But the whole idea is to wait for your setup and wait for a clear setup. So I want to grab some lows here. If we already grab the lows, if this is going to be the grab, then what we'll see is a breakout of this range. We'll see a retest of a shelf. We'll probably see some sort of one strategy for life model here. And if we don't see it there, I'm on the 15. Let me go down to the 5. If we don't see it like on a lower time frame, like the 5, then we can bump it up. We can go to like a 30-minute or something like that. So yeah, that's pretty much all I got. Go back over to fun stuff because I got a few other things to talk about. Look at gold doing exactly what I pointed out, literally to the T. I mean, like, this is exactly what I was thinking gold would do. So we have a nice downward descending channel. I have a video on channels on my channel. I have a video on channels. But this is like this specific, pattern. And I hate saying pattern because people are like, oh my God, you're a pattern trader. Let me give you a quick wake up call. Everybody's a pattern trader. Literally every trading model that ever existed in life, like ever in trading, okay, is a freaking pattern. What is a pattern? Go look up the definition and you'll see everyone who has a trading model is a pattern trader, because that's how you develop a trading model. You see patterns. And I think when people say patterns, though, they're more talking about chart patterns. I get it. Okay, leave me alone. But, you have this breakout, this descending channel is a nice pattern as long as, you're hitting a key level. And 2645 is a key level for me. And I had it up here. I deleted it. But the reason why that was a key level is because prior was a shelf, and this shelf was respected once before. Kind of the overnight session was respected, and actually I was going to take a long off of this, believe it or not, but there was no setup, so I was like, okay, I'm not gonna take it. But right now, breakout. Okay, we'll go down the 15-minute time frame. So you have a fair value gap. We'll see how this closes in 8 minutes. So far you have a fair value gap with a breaker, and I think we're going to see higher prices for gold because there's uncertainty in the market. So gold is doing exactly what I thought. Pretty cool. Bitcoin, weird. I don't know what's going on with Bitcoin. I would imagine that Bitcoin would be bouncing from this level, that 60K level, specifically right at this shelf. Okay, I'm going to go down a lower time frame. Yeah, it is a little wonky. Like over here, it's a little wonky. It's not as clean of a shelf, but you do have a shelf that was respected, and then you have your breakout. So do you retest down here before turning up? I don't know, but looks like the NASDAQ is pushing lower as well. So I don't know if that news is going to really make a difference or what the market's thinking right now. So kind of just a weird reaction to news today, to be honest with you. But gold is doing exactly what I thought. Yields moved higher. I think let's see here. Yeah, so you got this whole concept of the dollar pushing up is happening. I put this on the board like Friday of last week or Thursday, whenever this was. Wow, Tuesday, or let's see, that would have been like sometime beginning of last week, or might even be the week before. But the idea is to come up, tap this shelf here. This is more of a swing trade idea, and then potentially lower lows. But if we break and close above this, then you're looking at a full recovery to 104, 103 prices for the dollar. Bitcan, what is he? Obnoxious lately, yeah. Bitcoin. Yeah, Bitcoin is being obnoxious. Yeah, that's a little weird. I agree, Sam. So anyways, the dollar rising, which is kind of what I expected, and then check out what yields did today. They rose off that news, like a significant increase too. That's kind of weird. So yields rising. I think oil is up from when I called it yesterday as well. So oil is. Does anyone take a long on oil? Let me know. Type it in chat if you got a W on oil. I mean, is Bo in here? Bo trades oil like every day. But we called this yesterday. Actually, I can't believe I deleted it from the chart. So, but I was in, I don't know, we were somewhere around here in the morning. I'm going to go down to the 1 hour and find it. Yeah, we were like 10 o'clock and I was like, oh man, this closed above the range. This is looking like a pump. Probably going to take out that swing level. And that's exactly what happened. I mean, I wish I would have taken the damn long. You missed that one? Oh, okay. I got you, Bo. All good, man. You're not going to get them all. But yeah, the reason why oil is going up, guys, is because of the tensions in the Middle East. That's it. All right, so we got the Qs crossing a level, taking out London lows. Like I said, guys, this could be seek and destroy. So seek and search and destroy is very simple. It's where you have pretty much a widening cone. So let me draw it out for you. Something that looks, based on our daily range, like this. Okay, this is where traders can get really, really, really wrecked. So identifying this early is super difficult as well. It's really, really difficult because you don't know. Right now you're at a discount. You're under true day open. And Troy, please cut me off if you're seeing anything, bro. If you.
I mean, for me, I'm in a discount, so I have to be looking for buys. So I'm just looking for signs of reversal to take a long to go up to
Yeah,
fill some of that imbalance from yesterday.
I agree. Yeah, and even
So
if we're in seek and destroy, taking out some of this lower level liquidity, seeing a pump to the highs to grab the highs, I mean, I'll take that. You know.
yeah, you don't want to get caught in the middle. That's the main thing. You don't want to. You want to either be in at the lows to take a long, or wait for us to get to the highs to take a short. That's the key. Don't get caught in the middle.
Yeah, yeah, yeah. So I'm going to let me go down to this 1 minute because we did grab lows. We don't really have much displacement here, so it's kind of a bummer. Yeah, really, it's kind of see how choppy it is. Very, very messy. I mean, the algorithm is taking everyone out, man. So maybe we pump a little bit lower and create a little bit more displacement. We'll see. Because what I want to do is I want to find some type of gap in here. I want to be patient. I want to find, I mean, I do see there's a shelf. I mean, I get that, but I want to see some type of displacement or a gap that I can then look for an inversion on, or some type of break of structure. Right now, the structural range is up here. I mean, it's a little high, honestly. It's up here. So price would need to break that in order to break structure going up. Does anyone have any questions? Do you guys want me to go through any structural? You want me to line out structure in here? Like structure, I feel like is the key that a lot of people miss. So if you want me to do any training like that while we wait, let me know. Back to the fun board while I wait for you guys to answer that. Look at NVIDIA. This is why the market's This is why the NASDAQ is dumping, is because NVIDIA is dumping. So pretty much exactly what I said on NVIDIA as well. We have the break below the range, a retest. And you can even see in here, like I'll line it out. Look at the structure, right? You have the shelf. It's kind of hard to see, but when you trade for a while, you start seeing these things a lot easier, I promise. Just give yourself time. So you break the range, you create a leg down, tap the shelf, create a leg down. You have a shelf in here that was disrespected right here. Okay. Make this a little bigger. So this was respected, and then disrespected. You see that? So it was creating a leg and then decided to push back up and respected this prior shelf, which is structure. And now you have the market sort of creating this next leg down. And now what is your shelf going to be? Right? You don't really have one in here because there's no clear area. So we're going to use the prior shelf right here. So market is moving down. I bet the NASDAQ is dropping significantly. Let's see. There it is. What do you know, Joe? The nasty Nas.
Okay. One thing I did see, I'm just noticing right now, is the Nas did take out Wednesday's high, or Wednesday. Yeah, took out. Well, today's Wednesday, or I guess pre-market. Okay, so London, Asia, even Asia. Yeah, so it took out that high, but the S&P did not. So there was a little bit of a SMT there that I'm just now seeing. But what we need to be focused on right now is those lows, the weekly low. We got Tuesday's low right there. Just S&P's already taken it out. The Nas hasn't quite done it yet. So that's one thing I'm going to be looking at to see if the Nas does take it out or not. Which it ought to. You would think it would go down there and just boop.
Yeah, previous daily low. Yeah. Yeah, pretty much yesterday's low, right? That what we're talking about?
Yep.
Yeah, it's right there. I got it circled and definitely looking at that. So let's look at structure real quick. And because I know this is a pain point for a lot of people. So kind of zoom out on this 1 hour and just kind of break it down from the 1 hour as we're dipping. And I'll put an alert right here at that previous daily low. Looks like we're going to grab it. You said ES already took it out. Yeah, so most likely. So if we look at structure, we just kind of zoom out and we can notice that when we zoom out, we notice that what is the high in the market. So we want to mark that high, and the high is over here. So kind of mark that with my highlighter. And we always ask ourselves the question, what created that high, right? And so we can see that this was the 3 candle pullback rule, which it takes 3 candles to create a swing. And so that's what I kind of live off of. And you can see that this is the area that price swung. So that would be your range, right? So what I like to do is I like to clearly mark and identify these ranges. Here would be the bottom of this range. All right, we'll just go here. Here would be the top of this range with the candle body. Let me zoom in a little clearer. Okay, so we were stuck in between that 1 hour range for a while. Okay, we were in between it. Price was in between it, and then we closed a low right here, creating a lower low right here. Then the market was just really wonky here, and then pretty much the 3 candle pullback rule. If you look at all of these candles in here, there was no moment where price created 3 candles. So this was the range. It was up here, right? So here's your range, right? So this entire area became a new range. So price broke that yesterday, right? Screamed down and created this low. And so now you have to ask yourself before this low right here, because it's not closed, on this 1 hour, what's our low? Our low is, well, it was here. And then our high with the 3 candle pullback rule is here, right? So that's your internal structure. Anything in between these is your internal. It's all break of structure. It's not a change of character. It needs to break up here before you actually decide, okay, market is actually changing character to go up. Here's what a lot of traders will do, and I'm just going to point out the mistake, is they'll go like this, and they'll go, oh, look at price. It broke structure. It changed character. It's moving up. Look, I can show you right there. It's like, well, internal structure, yes. External structure, no. So what's stronger? You know, this is going to be considered a BOS, not a change of character. And so you take it with a grain of salt. Does that mean you don't trade it? No, it doesn't. It's these are rule of thumbs, first of all. And you know, I know we're watching this, Troy. I don't know if that created any displacement down there. Let me know if that's showing any signs of reversal, because we can switch over to a lower time frame. I'm just showing structure real quick. So should I go to the lower time frame? I don't know. You're there. You're watching it, right?
Yeah, I'm not. I want to wait until at least 9 o'clock.
Okay, got it. Um, this is making me think that this is more like what we were talking about earlier, that seek and destroy model that I have, the widening cone. It's definitely making me think V-shaped recovery right now. Nice displacement. This is a strong bullish recovery happening. So going and taking out longs might be the ticket, guys.
Yeah, it didn't take out previous day's low either. S&P
Mm-hmm.
has already done that.
Yeah, this is
But
I think this is seek and destroy right now. That's what it's showing. This is a nice bullish recovery. This is like pretty big money buying this dip right here, guys. Super fast too. Before 9:45 candles done. Let's see this 15-minute real quick. Uh, yeah, so check this out. You got no bottom wick on this previous 15-minute candle. Price comes down, creates the bottom wick, and then completely reverses. Whenever a candle ends without a range, without a bottom wick or a top wick, it's not guaranteed, right? But a lot of times I see the next candle create the bottom wick and then create that reversal candle. Not that price is going to continue with the reversal, but that is just something that we look for. So let's go to the 15-minute range, and now we know that we're inside of that big range on that 1 hour, right? So on the 15-minute candle, 15-minute chart, you have the same thing. Like your bottom is right here, the 15 is way up there. You know, it's really no different. It's really no different on all. I mean, I can go down to the 5-minute. It's really not that much different on the 5 either, especially when you count this as a low. Now, if this creates a lower low on a 5, you have a new range, right? But right now, this is the low over here, previous daily low right here. So you got to say, okay, well, what created that? And you got to go all the way up to the top where we dumped from. So internally, you have a lot of structural moves. So let's go with our session right here. Let's go with our, let me put up the session range. And let's go with our structure based on sessions. So here you have your high. Here you have your overnight lows. You have your highs. Let me do that again. You have your highs. You have your overnight lows, right? So price grabs the lows. What created that? Well, if this gives me one more candle, we can say that here, that created it. So what's our 5-minute range based on the overnight sessions is going to be right here. I'll get rid of that just so it's clean. Okay, so the widening cone idea is just based on sessions. So whenever you see this, right? Whenever you see, now typically you for a search and destroy type of model, a lot of times you'll see London taking lows and highs within the session range. This is the session, right? But you don't see that. You see this pre-market taking highs. So whenever you see pre-market taking highs like this, I count it. I mean, I count that as it's still part of London. It's not like London's closed. and New York hasn't really officially opened. So um, but it is nicer. It is a little bit more nicer when you see London grabbing lows and then London grabbing highs, and it's all within the actual session, the primo part of the session where most of the volume is taking place. So is it any 3 consecutive candles to create a swing? Yeah, and I challenge you, the more you look at a chart, the more I would challenge you to just ask yourself, um, is it obvious? Let me go to let me go to the 1 hour. Sure. Okay. So like what is if I were looking at this chart, and you have to just kind of think about it like the 3 candle gives you a rule of thumb. It's not that you have to follow it. It's what I like. Um, what I would prefer that you think about is more of practicality, or I don't know what you would call it. Just use your eyes. What's obvious, like don't worry about what everybody teaches and all the rules. Just look at the chart, and I don't know, a sense of me, a part of me just says, look, use your senses, right? What is the most obvious swing point? Like, where do you think traders would be placing their stop if they were, let's say they were going long right here? Like, where do you see? Probably below these wicks. Yeah. Like, what is your guess? If everyone voted, what do you think everyone would say? Would they look left and put it under this swing point? Depends, I guess, on what their target is. But let's just say they're going long, right? If you're trading on a 1 hour, then you're a day trader or you're an intraday trader. You're not really swinging on a 1 hour chart. You're swing trading on a 4 hour, on a daily, on a weekly. So if you're going long here, you're probably trying to get like somewhere up here, maybe the top of the range. So, even if you said, okay, I'm going long, let's just say hypothetically, and your target was somewhere up here, well, that's my 1-to-1 right here. Now, certainly people don't like that. Everyone's taught that you need big R's, right? So we're going to put their stop, and they're probably going to get stopped out. So, but you guys know, I'm not going to go on that rant today. So, but they'll probably put their stops probably under this swing, probably under these wicks, because it looks like support, maybe a little bit deeper. Yeah. So let's chalk it up to that. So now let's change our time frame. Let's go to the 4 hour. Well, now what's the target? Well, if now the target is much further, right? Now it's like, okay, well, that seems pretty good. And you're like, okay, well, where would most people? They probably look left at the swing and protect themselves under the swing. So where is the majority of big money? When you talk about swing trading and day trading, you're more talking about institutional trading. So the big money is going to be looking at areas, in my opinion, anyways, that are the most obvious. Most obvious. This is obvious. Even like here, this looks pretty obvious. So anywhere down in here, this is already grabbed those levels right here. This is an obvious swing level, None of this is really obvious until you get way down here. That's obvious, right? So those obvious levels are seen. Everyone's seeing it. It's not just me. Everyone sees it, everyone. So millions of traders around the globe see those levels. So that's why you get reactions from those levels, specifically on larger time frames. That's why it's good to do a top-down analysis, so you get those larger time frames. You put those larger time frames in check. So the 3 candle pullback rule is a safety measure for if you're not good at just kind of, seeing it yet, then just ask yourself, does it have 3 candles? Okay, it does. All right. Well, it meets that rule. I guess I'll just follow that rule. That'll protect you. It's just for safety measures, You guys doing all right? Do you want me to, if you have any questions, let me know. I can definitely help with any, and by the way, I just want to be really clear. Like, I'm going to say this, you're going to hear me say this a lot, because it's just my core belief. But there are many ways to win when it comes to trading. Many entry models. I believe that money management is 80% of what makes a trader profitable. And I think that the entry model is a necessity for traders because you're just guessing if you don't have one, right? So I think it is necessity, but it's not the focus. And Dakota and I were talking last night, and I was like, he's doing the carnivore diet with his wife, and he said he's got like zero fat. And I was like, man, a lot of people think that it's just working out vigorously that gets your body shredded. And yes, working out, duh, it's great. But he's like, dude, the diet, man, the diet's 90% of it. Like, you don't even have to work out and you're going to shred. And I relate that to trading. I know you guys have heard me say that before, but trading is a lot the same way. People underestimate the power of money management and they focus on entry models and they think ICT, SMC, ABCD, EFG. There's so many ways. I've actually, it's so funny because I went from losing for 4 years to being able to now, this will be my third entry model that I've had success with, right? And so it's just funny to me how that works because I was not successful for a long time. Then I switched an entry model. I started with support and resistance hedging and ladder ordering, and I made a lot of money doing that. And then moving into, this entry model is to me the best out there because it allows me to teach the things that I want to teach as well as focus on a solid setup. So you have high time frame liquidity. I think that's incredibly important. That's what all of the major institutions look at and need in order to place their orders. So I know liquidity. Even my mentor spoke about liquidity just differently than ICT or SMC concepts. But you have structure. So you want that structural break. So you want that lower time frame structural break swinging. So I love swinging too because that includes a 50% rule. You're buying at a discount, selling at a premium. So that's great. And then inefficiencies in price. Inefficiencies show displacement where orders were left behind, and those are really solid areas. You can look at fair value gaps. It's unbelievable how accurate a lot of these fair value gaps are, specifically on higher time frames. You see it all the time. So it incorporates all those things, and when you piece them all together, I think it provides like one of the most solid entry models out there, if not, in my opinion, one of the best to teach as well, because it's very straightforward, very, very simple, very easy to teach, and it does work. And then, so what does that mean? It works. Okay, I'm going to tell you what I think that means. It gives you a chance it gives you a clear spot where to get in. And a lot of times, more times than not, you have a chance to manage the trade. You guys know I'm not a set it and forget it person because I don't believe in that. I'm not going to say I don't believe in it. It doesn't work for me. I know there's certain people, maybe they do that. It doesn't work for me. I look at price on these lower time frames and then I manage as I see fit. If I see price telling me when I'm in a long that it's reversing on a lower time frame, then why would I stay in the long? Right? It makes no sense. So for me, what works is money management, and the type of money management that works for me when I'm in a trade is going down on lower time frames and then seeing what price is doing. When you say traders would put their stop loss here, what kind of traders are you referring to? Anyone, like any trader. When you're taught, when you're most traders, I mean, like I would say most traders, right? When you're looking at the chart and if a trader was looking at going long here, like they thought the price was just going to go up, I feel like the majority of traders, like when I ask, if I were to take a poll, right, and say, hey, if you were to go long here, where would you put, where would everyone put their stop loss? Traders like us wouldn't affect the price, would it? Yeah. I mean, look, retail traders and bots exist. I mean, there's more small hedge funds than there are large hedge funds. So absolutely, like I'm just saying in general, I think traders will find areas that are structurally, they'll look at structure And I think a lot of like new inexperienced traders will press their stop too close to price. And I think experienced traders will look and see structure, and they're not afraid of pushing their stops to areas that make a lot more sense. Especially because most of these hedge funds are buying and swing trading on higher time frames, like the 4 hour, the daily. So I mean, their targets are obviously here. We're gonna make a new high. We're gonna go take out all-time highs. That's my target. Boom. So to press my stop in an area that, I mean, why do that, right? It just doesn't really. I might as well at least get a 2 to 1. I can press my stop way down, have time to manage the trade, etc. So I think the biggest reason why people lose is that they press their stops. And then once you stop pressing your stops so close to price, that's rule number 1, to stop doing that. And then rule number 2 is take your sizing and cut it in half, and then cut that in half. And then you have no stress. So I feel like that's probably the fastest way to get profitable, are those 2 things. I said it yesterday, I'll say it again, but yeah, it's like rule number 1, give yourself more room. Rule number 2, cut your trade size in half, then cut that in half. And that gets rid of your stress. I mean, I promise you won't have any stress if the money doesn't really matter. So if this is about winning, what do you see? What do you see happens? People come in, right? We've had, I don't know, we have 1,000 members in our group, guys. Like, what do you guys see that happens, right? People come in, they open up a demo account. What do they do? Write it in chat. Tell me what they do. What do they do in their demo account? What do we see? Pretty much every new person that enters our group, what happens in their demo account? Type it in chat. What do you think happens? What is pretty much every new trader that comes in to the Midas Touch Trading Group, what do they do with their demo account? I'm just waiting for a few more answers in here. You guys are funny. David says blow it. Dakota says blown. Like a baby in a diaper. That's blowouts. That's pretty graphic, Dakota. Thanks. Step says big risk. Michelle says I didn't blow it. That's right. I'm waiting for other answers, man. Most demo accounts has big wins in all caps. Fioravante. They get McFly. Okay, there you go. So even Troy will tell you guys, they get rich. They get demo rich. And that is exactly what most people that have come into the Midas Touch Trading Group do. They open up a demo account and they freaking crush it. They crush it, man. And the reason why they crush it is because they have zero stress. And I want you to listen when I'm saying this, man. All this, I'm just going to tell you, oh God, I don't know how to get this point across, man. There will never be, I will never have like enough words or the right words to get this across, because you just will not understand it until you do it. But it's 100% because they're stress-free. It has nothing to do with the training. Nothing. It's 1,000% mental. Like, I don't want to say it has nothing to do with the training, because that kind of degrades what we're doing, right? But I believe that like there's so many different ways that these people that come in can win. Many different ways. Many different models, man. And I will say I give a lot of credit to a lot of the guys that have like really tore it up, and they do stick to the one strategy for life model, and they're posting their wins in school, and we would see it, right? We would see their, what kind of entry model are you doing, right? We would see it. Everyone would be like, what are you doing? So I do give credit to it, but that's not the primary reason. I don't believe that. I think the primary reason is because they have zero stress. And when you have zero stress, you can make better decisions, and you're non-emotional. And the faster you get to that place, man, the faster you'll be a successful trader. The longer it takes you to get to that place, the harder it's going to be for you to stay in the game, because most people, they do give up, you know. And that's not a dig. It's just what happens. And everyone's got, I don't care whether you're like swing trading, you're scalping. And this is what I told Dakota last night. I'm going to go on a tiny rant because I think it's important. But Dakota last night, we were on the phone. I said, dude, people, what did I say, Dakota, about scalping? People are, they fall in love with this idea of scalping. But let me just explain something. There's more unsuccessful scalp traders than there are unsuccessful swing traders, because scalping is freaking difficult. Okay. You have to have experience, intuition. You can't care about your money. You have to have your sizing right. You have to really have a strong entry model. And beyond all of that, you just have to understand that you're most likely not going to win because of the fact that scalping is micro trading, and there's a lot of noise on a 1 minute time frame. There's a lot of noise on a 30-second time frame, but still it captures most new traders. Most newbies think that they're going to be rich from scalping. It's unbelievable. It's unbelievable. And that's not where I made the most of my money. I made the most of my money in trading from the 4-hour time frame, ladder ordering in and hedging. That's where I actually made the most of my money. And I'll be honest with you, like, scalping's been a lot more difficult. It's been rewarding because because it's difficult. But yeah, man, I'm telling you right now, scalping is hard. And Bo, Stewart, these guys, you guys have traded for a while. I think Stewart's traded for now going on 4 years or so. And then has been really successful in our group. And he'll tell you as well, man, like the higher time frames are where it's at. So what sucks about the higher time frames is you got to wait. Nobody likes to wait. Oh, I need money now. I got to quit my job next month. Oh, this guy, he's not ICT. He doesn't know what he's talking about. Okay, sure. Whatever. Go down the rabbit hole of ICT then. Good luck. Yeah, man. I don't know what to tell you. You stick with it long enough, you'll find your I think there's people that are successful scalping that they're kind of, it's also like your personality. Like, don't run away from who you are, you know. So there's certain people built for that, and certain people are not. So I think the majority of people take profit too early, and they let their drawdown run and draw down too much, and that's why they lose. They take profit, they take tiny profits because they can't handle price moving up, up and down. Basically, they take tiny profits, and then when they're in drawdown, they have hopium and they let their account go to zero. So all that to say, if you want to, in my opinion, this is just me. All right. I'm nobody. But if you want to quickly become a profitable trader, trade with sizing that you don't care about. Yep. That's it. One time frame, I don't have one time frame because that's just not the way that I trade, right? So how do I explain this? I hear this question a lot. I should have a good answer for this. I don't really have one time frame, okay? But I guess if you had to put a gun to my head and say, choose a time frame right now, 4 hour. Yeah, because this is where the big money is at. This is where, do you think big money is trading on a 1 minute? No, they're not. I'm not saying that they're not entering on a 1 minute, but they're not looking at a 1 minute chart and discovering where liquidity is at. They're looking at a 4 hour, they're looking at a daily, they're looking at a weekly, a monthly. So yeah, I think because overall you can find trends on a 4 hour and at least have time. Listen to what I'm saying. Just listen to what I'm saying. When you get into a trade, you want to have a chance to manage the trade. Does everybody understand? Type 1 in chat if you understand what that means. Type 2 if you don't know what that means. You want to have a chance to manage the trade. Sam, you're kicked out. Block Sam. Okay. So So keep typing, guys. Let me make sure. I just want to get a feel for the room. If you understand what it means, type 1. If you don't, type 2. Cool. All right. So most people understand, but there's still maybe a little confusion. So I just want to make sure we're all on the same page. When you enter a trade, having a chance to manage that trade means that you're in profit. You're in profit and you're able at that point to set a break-even stop and protect your downside, because that's what trading is all about, protecting your capital and losing less than you win. So on a 4-hour time frame, you're going to have, in my opinion, if you're going with the trend most of the time, especially if you understand structure, you need to understand structure. That is critical, or you're not going to win. Doesn't matter what time frame you're on. You're just going to be trading against the trend. That's why flipping a coin, people say, oh, you have a 50-50 shot. No, you don't. That's not true. That doesn't apply to trading. That applies to a coin, which is even on each side every single time you flip it. But in trading, there's this thing. It's called trending. And it's called, you're trending up or you're trending down. It's called structure. And that gives the house an edge. So you're either going to win on longs more than or you're going to win on shorts more than longs. And if you go back 50 years on the NASDAQ, what direction has it been? Up and to the right. So over the last 50 years, if you were to flip the coin and go long and short, theoretically, because it's trended up, longs are in favor. So no, it is not a 50-50 game. That is a lie. Another lie that a lot of people tell. So on a 4-hour time frame, you get a chance to most likely manage your trade. Doesn't mean you're going to necessarily win it and take it to whatever TP you have in mind. Because remember, these are just your ideas. Your TPs are just your ideas. But if you can get a chance to manage the trade, you're in better shape than if it just runs against you and goes to your stop loss every time, right? You ever feel like that happens? But if you look at most of your trades, I bet you that you have a chance to manage those trades. You had a chance to set a break-even stop, but you didn't. And it's nobody's fault but yours, right? But how would you know? And oh man, the reason why traders don't do it, there's two types of traders that do break-even stops. In the beginning, you set them way too early. You don't let price get away from your stop or your entry point enough. And so you'll set it too early and you just get break-even after break-even. It just becomes annoying and you're like, screw these break-evens, man. Not doing them. Once you get a little bit more experience, I like from a 1-to-1, if I'm setting a 1-to-1, I like price to at least go halfway to my 1, right? And then I'm setting a break-even stop. That's kind of my rule of thumb. That's helped me. So you got to set a rule that sort of helps you with setting that break-even stop. If you don't have a rule in place, I think you'll just be setting your break-even stop either too soon. And then here's the other thing. Here's the other trader, because that's the first trader. The second trader will set a break-even stop and they'll have a rule. But after a certain amount of times of that break-even getting hit, they'll break down mentally and they'll say, I don't want to do it. And then they won't protect their downside. And I also can see a lot of times people take their profit too soon, So once you hit that 1-to-1, it starts fading back and you freak out. But like I said, man, it's like you're either one or two type of people. You're either going to be a set it and forget it person, or you're going to do what I do, which is go down on those smaller time frames. And if I'm in a long and I see a 1-minute IFVG fading back, coming back down, I'm going to get out, because that's like price is telling me, hey, I'm going to reverse. So hopefully that explains a little bit. But yeah, there's not one time frame, because here we're bearish. Like this is the 4-hour time frame, and we're in a downtrend, not bearish. We're in a downtrend, right? But if I go to the daily, what trend are we in? We're in an uptrend. People hate learning that. They do not like it. They will run away from this, and that's really the reason. I'm not trying to poke at anyone, but that's the reason for the question. Hey, what time frame would you like? What's your favorite? That, I promise you, that's the main question that people have, because they don't want to learn the practicalities of the chart, because time and price is fractal, and it does take time to learn it, but it's totally worth it. So so here, I mean, price coming down. What is it coming down to? It's coming down to a shelf on a daily time frame. So I should expect a retracement. I also can, you can use a Fibonacci if you like that. I use this little PD, but there's a Fibonacci right here. And you can see price could fade back into the golden pocket, could come halfway, it could reach down into this lower order block on the daily time frame. And guess what structure we would still be in? Upward structure, right? So if your overall sentiment, like if you were a hedge fund, here's what you would do. You would buy here. Where would your stop be? Down here. It would have to be. So where would your take profit? Way up here, dude. Like we're going up to this TP level right there on the fib. Do you see how, like, okay, so price doesn't do what you want right here. It dips, whoops, it dips a little bit lower. You're a hedge fund. You need to deploy capital. You need to get in on this bull run, election season, yada, yada. Here's the 0.5. What do you think you're doing as a hedge fund? Do you think you're getting out of this trade? Do you think they're just, oh, we lost that little trade? Like, no, dude, no, you don't do that. No, you deploy more capital here safely. Oh, but you're not supposed to ladder order. Hold on, that's they teach you against that. That's not good, dude. You're wrong. That's exactly what they do. That's what all the banks do. They have more money than you can imagine, and they're they deploy capital in bull markets when there's pullbacks. That's what they do. And then when price comes up to, let's say, halfway, or they're in profit, they can deleverage their positions, but there's no need to, because they're going to ride this market out, and they're only interested in longs, I promise. Look down here. Okay. So what are they doing at this order block level? They're buying. That's what they're doing. They're buying. So it's a very different, from a hedge fund point of view, I think it's very different. Very, very different than retail. They're not going to be interested in shorting a bull market. And this is, make no mistake, we are in a bull market. So got a question. Were you were profitable with hedging? How come you evolved? Interesting. That is a very good question. I sometimes ask myself that question too. I was actually talking to Dakota about this last night. I said, man, I think you even asked me, Dakota, do you still hedge? Do you still do it? I haven't done it in a while. So there's two reasons why. When I started to really get serious about teaching and creating like the Midas Touch group and everything with Troy, we noticed that a lot of students, besides mathematicians like Bo, they were having trouble with the hedging. And really, after like 4 or 5 trades deep, it does get a little complicated. Now, for me, I've done it a while, so to me, it's the easiest thing in the world. But we also wanted to promote the idea of a stop loss, because you can't hedge on futures accounts. And there's a lot of traders that were interested in coming in and like learning what we're doing, but they're like, yeah, I trade futures. I don't trade CFDs. So I basically just took the hedging away, and we just use order blocks on higher time frames and kept the same model, but we just used a stop loss. So that was our second evolution from hedging into basically the same strategy, just order blocks. So we defined what we call our zone craft areas, the zones that we want to take trades in, and we basically use stop losses instead of hedging. So that was the second evolution. And then the third evolution was getting into pretty much the 50% rule more than anything, and really looking at displacement and liquidity levels differently. So that way we didn't have to use our discretion, or our, it became a little bit more mechanical rather than me. Because if I said, okay, where's support and resistance? And here's the chart. Go ahead, go for it. Somebody's going to draw a line here. Somebody's going to go, okay, I see something here. I see something here. Somebody's going to go, well, I would take that. And before you know it, you just get all these, they're everywhere, right? There's no real like defined support and resistance area. So when we honed in on the One Strategy for Life model, we knew that we need something clear. And it dawned on me, man, I'm not going to lie, 7 years of trading, and, I've been profitable almost 4 years now, just coming up on 4 years. And I thought to myself, damn, I just realized this. And this was like what, November, October of last year, somewhere around there. I said, man, support and resistance is defined by what is it? It's liquidity levels. It's swing levels. Literally, it is the definition of liquidity levels. So if I were to come down on, let's say, a 5 minute and I said, okay, cool. How do you know what support and resistance is, right? From a horizontal, I'm talking static support and resistance, not dynamic, right? So static meaning multiple touch points. Let me squish this down. We might say that, okay, here's a resistance level up here, maybe, right? Let me turn this as a resistance level. Maybe people would see this as a resistance level, right? And so what do you think is there? Meaning what's above those support and resistance levels? I promise you this is where traders are putting their stops because it's obvious. When it's obvious, it's where traders are putting stops. If I go to a 30-minute, you can see those levels right there, right? And so it dawned on me that, oh man, I don't even need to use support and resistance. I'm just going to use the liquidity above those levels. Why would I even focus and try to complicate with support and resistance when what's really there and what price is really after is the liquidity? That's the whole reason why a lot of people buy or sell, right? So they're going to be selling at resistance, right? Why are they selling there? Well, because what price does is it goes and it grabs the liquidity at these levels and then pushes down. Now, it doesn't have to do that. There's a break and retest model as well. So how do you know? How do you know whether it's going to break this level and use it as gas to continue higher? How do you know? And that is where the key of having an entry model comes into play. If you didn't know any better, you might just be shorting right here. And that's what a lot of traders do. Now, I was shorting. I would do the same thing, but I would hedge if I was wrong. And when price, so I would hedge here. I'm wrong. I hedge outside this level, wherever, and it was discretionary. When price comes back down, I would release my short and just keep the long and maybe even add a long. So all price had to do is come up halfway. I deleverage. Now I'm in a long position and I can write it up. Genius model. It is my favorite because it's a lot of fun for me, but it's hard to teach, and you get into these, and not everybody can do it because they don't have futures accounts, right? People are addicted to the prop trading as well. So it's like I kind of wanted to get something that would help everybody identify clear areas without the confusion. And so anyways, liquidity is much stronger. It's a much stronger, in my opinion, this is my opinion, it's a much stronger thing to look at in the market and in price action than support and resistance, where everyone's going to have their own idea of where support and resistance is at. And it's like liquidity is very, very, very clear. Previous daily low, previous daily high, previous weekly low, previous weekly high, so previous session high and low. I mean, it's very, very easy to identify equal lows. So yeah, I don't know, man. Like for me, it made a lot more sense. Break even stop at 1-to-1 and take 50% profit is Stewart's rule to capture something from the trade. Yeah, I mean, capturing something, right? Not capturing profits at rather than not cap. Oh, I got tired of not capturing any profits. Got you. Yeah. So I'll kind of tell you what I do, and maybe this will help. I don't know, but like, and I don't do it. I'm not religious at this. This isn't like a set rule, but this really kind of goes to your point, Stu. So let's say I'm up for the day and I won my first trade. And I guess it kind of depends on where I'm at for the week, but I mean, let's just say I'm up, right? If you're up for the week or the day, the second trade, I try to get a runner. Okay, got you, Troy. So I won't take any profits off at 50% or 1-to-1 or anything because like you ever play, like you ever go to the casino and you're like, you're hot. It's just, you're hot, right? Trading can be like that. You can go cold and you can go hot. And don't care what your entry model is. You're going to go hot. You're going to go cold. It's just going to happen. And and so I like to try to play into those hot moments, you know? And so if I'm in a trade, the hardest thing is trying to let that trade ride and just setting that break even stop and walking away. Um, I'll be honest, last night I took that trade on Euro AUD with Dakota. Dakota, did you win that trade? Or did you? I didn't ask you, but type it in chat if you won that trade. But basically putting the break even stop, walking away. And I was, my whole philosophy to that is profitable traders know two things. And this is what helped me become profitable as well, is understanding when to put the gas on, like the fuel on the fire, meaning you step on the gas, right? You add more sizing to your trade when it's a very clear setup, when you have a lot of confidence. And then secondly, letting that thing go and just ride. That is tough to do, man. It's freaking hard. You don't think it is until you have a $40,000 or $50,000 trade. I had a $140,000 month a few months ago, and the big thing for me was, holy crap! Like, I was looking at this winning trade just ride, and I just wanted to shut it down. Like, I wanted to shut it down because I wanted the money, but I had to, price wasn't, and as it got away from my break even, I had to bump up my time frame because lower time frames are pretty noisy. So I would go up, and I was on. I think I got to a 30-minute time frame, and I said, if I see an inversion on the 30-minute candle, I'm going to get out. And it inversed the candle. I got out, and you know what happens after. And I closed full. And this was a mistake I made, because I could have closed like 80% and seen if it was going to continue or if that was just kind of like a fake out. And man, that son of a gun just rode up like 5 times more. It's just like my heart sank. But I don't look back. Once I'm out of the trade, I'm like, I'm done. So Dakota says he wanted to wait on the next day to see what price did. You're in a demo account right now. Got it. Very strict rules. Okay. I love that. Yeah, treat it like a live account. So this is actually playing out exactly what I said when we first got on. This is seek and destroy. That's why I have these lines here on the nasty NAS. Taking out the lows, coming up, taking out the highs. We just took highs out. So there's your seek and destroy model right there. Now, I have a little I have a little bit more confidence that we could go up from here, but that's only based on just my own personal thoughts. It has nothing to do with the chart, really, because the chart hasn't broken out. Technically, you close above this range. That was a close of that 30-minute candle. So we do see that close above the range. And I mean, other than that, you don't really have anything. You have a shelf, which is a minor shelf. It's not really clear, but here it is. Price should bounce from there and potentially give us some higher highs. No top wick on this 30, right? No, there's a little top wick. Never mind. So yeah, there's that. Let me go over to fun stuff real quick and see. Yeah, Nvidia. Whoa. Go back. So Nvidia broke down just as expected from the early morning sesh. We actually look at the. I didn't touch anything. You guys, I haven't even put this chart up, but just look at the accuracy, right? Look at that. And I'm not going to take it long from there. It's not a trading model of mine, but damn, that's crazy. So bounced from my line, broke some structure here on this 15-minute time frame. And coming back up to our entry, we can then look at a potential reversal here. This is a 15-minute fair value gap. It filled the gap almost perfectly, and we'll put a 15-minute fair value gap right there. I think if you can get above this, right, if it can inverse this, you have a chance to retest the higher shelf. The higher shelf is going to be up here. And you have a fair value gap here too, so I am going to mark that 15-minute fair value gap on NVIDIA. I'm looking at NVIDIA, yes, because it determines what the hell the NASDAQ does, man. So it would be kind of stupid if I didn't look at it, right? Let's check out some other stuff. You got Bitcoin. What's it doing? Consolidating. Tap the shelf again. There it is. Stays within the range. By the way, these shelves also can help you with determining your range, right? Range is super important. So this is another way that a lot of traders trade. They trade range. It's called range trading, and there's a lot of successful traders that do that. So here we go. Gold. So gold came up, retapped. Let's see. Let me go to a different. If I don't see it clearly, I just move my time frame. But gold consolidated during. Yeah, I think gold is going to push higher. So this model, right? This model right here. If you look, you have Asia consolidation, right? And then you have a manipulation of the lows during, this is New York, so you manipulate the lows, and then from here you grab the highs, you kind of pull down. Honestly, it's kind of reminding me of what we're doing in the NASDAQ right now, to be honest with you. But the only difference is that London didn't take the lows of Asia and the NASDAQ did. So I'll check out CAD Shift in just a sec. Let's see. So yeah, I'm anticipating higher highs. This is a break of structure. So if we look at structure, so that's our breakout, right? So this is the channel. We break. Here's your volume candle. Price comes back down to the breakout area. This is where we're gonna have a lot of breakout traders going long. We'll see if that actually holds up. But I don't know why I'm not gonna keep that up there. Let's see here. And take this off the board. Yeah, so from a structure standpoint, here's your low. What created the low? Right in here. That was broken. This is your new high. That's your range. So your range is on gold. Your range is here, here, and that's a 15-minute time frame. So if we can see this candle potentially make a higher high, I'm seeing if that's a top wick. Is that a top wick? No top wick. Yeah, no top wick on this candle. So I'm pretty confident that that's going to go up there and grab that high. Do I take a trade? I think I'm going to. I think I'm going to take a trade. Yes, I like this gold trade right now. Let's see. Hmm. Let's see here. The one thing I don't like about this is that it's there's no real fair value gap here, right? So you have our breaker. Let me show you what I'm looking at for this trade, right? You have your breakout. You have like the clear swing point for me is here on this time frame. Let me go back up to the 15. It'll clean things up just a tiny bit more. But yeah, this is your 15-minute breaker right here. So this is where the swing was broken. We call that a breaker. So I'll go ahead and mark that out as 15 minutes. Where's it at? Oh, my eyes are so bad, man. Okay, 15-minute breaker. There we go. And then there's no fair value gap. I'd like to have a fair value gap in there, but there's really not one. And that's part of the one strat for life model. We want to see displacement, but this candle itself is displacement. It's just unfortunate, man, that there's just no fair value gap. I mean, gold is a beast, man. I traded gold for a few years, and she don't follow the same rules. She does not. You guys know what I'm talking about. She don't follow the same rules, all right? She's not playing around. So, and wow, okay. Interesting. I'm still in this Euro long, by the way. Euro AUD long. Still in it. All right, I'm turning my camera died. Hold on. All right, that's better. So, just real quick, my Euro AUD long from last night, still in it. Know what I'm saying? Still in it, dog. It came down. I thought I had a break even stop. I guess I didn't. I guess I didn't. But yeah, it's a light trade. It's a 5 lot, so not really looking like that's I'm not really stressed about it. I'm not stressed. That's the thing. I'm not stressed, man. All right, but I want to show you real quick today. I want to show you the Euro AUD buys from last night that I took profit on. You seeing that, Dakota? All right, this is my trading account live. This is my trade, and this is my P&L from last night, Dakota. You see it, right? So I took some profits, bro. I took a little bit of profit there, you know, and that was because of our talk. You asked me, "Are you gonna get in this trade?" I said, "Would it make you feel better if I did?" And you said, "I don't know what you said, right?" But it was just a good conversation. It was fun. Let's see. For the week, this is the last week. This is for the last week. For the month, the last month, doing okay. Gonna hit my 20K goal. In my live account, there's no prop account, dog. I can withdraw this money anytime I want. This is a funny thing about props. And yeah, I've been showing this every single day. So I'm at 224 now on the account. Light sizing. That's the key, man. Light sizing. I'm telling you. Oh, I'm looking at gold and I'm sitting over here talking. You guys getting excited for a second. Hold on. So I guess I didn't have it. I'm glad I checked this account right now because although I'm not really worried about it, it's not going to be some catastrophic drop on Euro AUD right now, but I didn't have a stop, so that's fine. Okay, so sizing for gold. Yeah, I'm gonna do. No, 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 no. I'm gonna go with 1.5. I'm gonna give it a shot. I'm gonna go long on gold right now. So I place that trade on gold. I'm long. All right. So that's all I see for right now. And we'll see. It might be seek and destroy for gold too. I'll probably give it like a 5. No. I may need to come down on my sizing a little. That's a bummer. 123 down, 124. Let's see. 1.5. I'm gonna come down. Go down. Point. 1.5 point. Yeah, I'm gonna come down on my sizing. Oh, am I gonna be in profit? Hold on. I'm gonna come down. I'll take the $40 loss. Yeah, so one lot on gold. And of course, now I'm in profit. Okay, great. Yeah, we'll see what happens. Okay, so I got those two trades running. Let's see, what else? Let me go back over to the nasty. Yeah, so we're pulling up to the top of that channel once again. This was called this morning. That's that widening cone. Doing exactly what, I mean, it's pretty predictable, actually. It's kind of crazy. We caught that early, man. Be very careful. This is, in my opinion, still seek and destroy. That's what it's showing. So that's what I have to roll with. You had to jet. Okay, cool. Oh, you had to jet your back. You missed some crazy, man. We're all up, dude. Who's got a W? Everyone type down. Now everything's been pretty. Yeah, and I took my shirt off. Yeah, there you go. Let's see here. What else do we got going on? Pretty boring morning, actually. Price has been ranging, so that's always fun. I took a long on gold. We'll see if that works out. Yeah.
See you, Kevin.
Yeah, see you, Kevin.
I think I'm about to roll out too. Kind of
Yeah.
no really need to be on the charts anymore today. Kind of feeling
Yeah, I'm overextended my time here for sure.
Tomorrow and
Yeah,
Friday is going to be the days. So
yeah,
I'll hold with
agreed.
us tomorrow and Friday morning.
Yeah, tomorrow should be pretty solid. Yeah, man, we'll see you guys tomorrow. Appreciate the time, and hopefully you guys got something out of it. I was able to kind of go over a little something here and there. If you guys took a long on gold with me, you're up. So that's cool. But yeah, we'll see you guys tomorrow. Cool.
Sweet. See you guys. Have a great day.
Yeah, have a good day, guys. Yeah, dog. Yeah, see you tomorrow, Michelle. Later, David. See you, Step. Peace, everyone. Peace in the Middle East. Can we get that? Gosh. All right, later, guys. All right. So, for everyone on YouTube, hope you guys had fun. I don't know if anyone's even watching. Doesn't matter to me. I'm just doing my thing. And I do this Monday through Friday. So if you want to trade with me, I'll be on the charts Monday through Friday. Link is in the description. And I put a lot of time, a lot of energy. It's a lot of one on one. When I say one on one, I mean, I'm literally there. I have the chat up in the group. I'm talking to people one on one. Had a long discussion with one of my members last night, Dakota. Shout out to Dakota. And what I love about talking to people who are real passionate about trading and want to get profitable with trading is that I get to hear like all the reasons behind it. And what I notice is that most people just want a little side income right now because like things are hard. Inflation is up. I don't care who you are, everything costs more. So I think trading is one of the coolest ways to get into a place where you have extra income, but I also know it's extremely difficult. So I don't sugarcoat things. You're not going to get that from me. Um, there's no, this is the one way to get profitable. Like that's BS. That's a lie. Um, and Yeah, man, I think it's psychology more than anything. So that's what I focus on. And it's helped me become a profitable trader. I show my live account every single day. Literally, I show it in real time. So there's no, hiding behind a curtain or, what did you do last week? Well, I show it. Literally, my entire profit, my entire P&L into my trading account has not changed. And so there's my last 6 months right there, So there's no hiding. There's no faking it. I took a fat withdrawal. I love trading. I love helping people. And shout out to anyone who got some value from this. Love you guys. And I'll see you in the next one. Stay positive, stay sharp, and God bless.